Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton,
Bob Scarborough.
and we are the FAIRtax Guys.
Da-da-da. Winter, spring, summer, fall. This is the only thing you need right here is the FairTax scrolling banner available at .org.
Oh, yes, fairtaxstore.org. That's cool. Okay, well, this episode is going to stream, if I've got my scheduling in my head correctly, on August 12th, which means I will have just gotten back from my Alaska trip. And I figure I'll use one more Alaska background here for this week's edition of FairTax Power Radio. I'm think I'll be going there every summer. That's going to be my summer vacation until I'm no longer able to do it. But that doesn't have anything to do with the fair tax, but it's kind of cool. All right, let's get going on stuff that does have something to do with the fair tax on FairTax Power Radio. Our weekly Congress.gov segment, which we did not get to last week when we had Paul Livingston on with us as a guest. But the Congress critters, as usual, have been busy trying to mess with the tax code again. So what we do is we go to congress.gov, we put the words Internal Revenue Code in quotes in the search bar at the top of the page, select only current Congress and legislation within the current Congress. And when we hit the go button on that search, it brings up 1,036 hits as of the day that we're recording this, which, by the way, is July 25th, if you're really interested in it. And the Congress has been in session a lot fewer than 1,036 days. You can see how many proposals to change the tax code hit Congress on a daily basis. It's astounding how much fiddling and fidgeting that the Congress critters want to do with the tax code. And we will start off. Let's see if I can scroll down to where I need to be. And that will be at, there it is. This is, get this, H.R. 4507, H.R. 4507 from Representative Jennifer Kiggins of Virginia, bill to amend the Internal Revenue Code to establish, oh, look at this, a temporary tax credit for eligible teachers who provide tutoring services and for other purposes. I will admit that's one of the things that I really just dig into here on FairTax Power Radio Congress.gov. All of the different tax credits that are in the tax code and the deductions and the loopholes and stuff that it's just, I mean, you got 80,000 pages of them just about. And every one of them is sponsored by a lobbyist, I can tell you. But H.R. 4507 to establish a temporary, again, that talks to the instability of the tax code that we refer to all the time here, temporary tax credit for eligible teachers who provide tutoring services and your favorite phrase, for other purposes.
Because you never know when you might need another purpose.
Indeed. Okay. Let's keep on going. Oh, look at that. I found another one. HR 4466, 4466. This is from Thomas, I think this is pronounced Suozzi, Suozzi, from New York, District 3, to establish a recycling property investment credit. Let's see if I can do that better. Recycling property investment credit. So I guess if you invest in recycling property, whatever that is, Representative Suozzi wants to give you a credit on your taxes for that if H.R. 4466 goes through.
And for other purposes.
For other purposes. Is that on there? Yeah, it sure is. To amend the Internal Revenue Code to establish a recycling property investment credit and for other purposes. It would be a whole lot better if we just wouldn't put all this junk in the tax code. Let the free market takes care of itself, and it will. Okay, keep on going here because we got a rather lengthy article that we need to talk about here on FairTax Power Radio this week. This one's from the Senate side, S2304, Senator Mark Warner of Virginia, to amend Section 45Q of the Internal Revenue Code to, oh, would you believe it, another credit, to establish the mine methane capture incentive credit. Want to use the tax code to incentivize people to capture methane out of a mine. That's almost Hall of Shame material, don't you think?
I would think so. And where you really are going to have trouble is if there are cows in that mine.
Cows in that mine creating the methane.
Some more methane.
Oh, mercy. To establish a mine methane capture investment credit. We can't make this stuff up. It's in there. Check it out and look it out. This one's pretty interesting. This is HR 4404. This is from Darrell Issa out in California. This bill actually has a title on it, the Clarification Act of 2025. And when I've got a title rather than just a description, that means there's text there. And I got to drill down into the text to see exactly what we're talking about. And this is a bill to amend the Internal Revenue Code to establish a tax for water pipe tobacco and for other purposes.
Water.
Oh, mercy.
We know what
That's,
pipe tobacco is. Does anybody in the audience know what water pipe tobacco is? I'm thinking uh can't even imagine that you would have to have a place like that.
oh, mercy. Okay, one more. This is HR 4389 from Representative Troy Balderson of Ohio. The Religious Exemptions for Social Security and Health Care Taxes Act. So again, I've got to drill down into the text to get the little description that we normally read for it. And that is a bill to amend the Internal Revenue Code to provide for a credit against tax or a refund of tax for certain federal insurance taxes for employees who are members of religious faiths which oppose participation in such insurance. So if you oppose Social Security, Medicare, something like that, and I'm not sure that people would do that on a religious, foundation, but apparently there are people whose religion, says that we don't want to participate in this stuff, and this bill will give those people a credit against tax or a refund of tax or the federal insurance taxes. Of course, we're talking about the payroll taxes, FICA, and your Medicare taxes, which the fair tax, by the way, gets rid of. So let's see. There we go. Boom, boom, boom. Mr. Balderson is the sponsor of that thing. So we just need to get him on board with the fair tax because it will do in a more elegant and fairer manner what he wants to do. Make sure that those people don't pay those taxes. Nobody pays the federal taxes for Social Security and Medicare under the fair tax. The support for those programs just comes out of the general revenue that the fair tax will collect. But if you want to get rid of the payroll taxes, as this particular bill does just for certain people, let's get rid of the payroll taxes for anybody and everybody by adopting the fair tax.
Absolutely, without a doubt, it's time.
All
Time
right.
to
All right. Speaking of time, that was a fairly expedited version of Fairtax Power Radio Congress.gov this week because we want to get into an article that you found. It's about a year and a half old. It was published in October of 2023 by the Tax Foundation. And it's kind of a contrast and compare thing on the difference between taxing consumption and taxing income. And since you found this, I will sit back and watch a little while and let you have at it. Go.
Oh, and people ask, well, that's a couple of years old. The underlying foundation of taxation does not change that much. Every so often, players
Yeah.
and initiatives will change, but over the long haul, and what the fair tax is all about is moving the country from uh, tax collection on income to tax collection through consumption. In other words, instead of taxing our labor, we get in the driver's seat and decide where and how and when we are going to take our money that we earn and spend it on something.
Yeah,
So
the principles behind this are just as valid today as they were back in October of 23. So you're really kind of talking about the same thing. There were several key findings that this thing came up with.
yes, and again, uh, we'll go through as much as we can. If you printed out this article from the Tax Foundation website, it would take 48 pages. So we're obviously not going to have time to go over all of it, but there are some summary commentary that we will do, and there are several people that we want to mention before we get started that compiled this article called "How Taxing Consumption Would Improve Long-Term Opportunity and Well-Being for Families and Children."
Mhm.
Erica York, Garrett Watson, Alex Durante, and Huquin Lee are the contributors to this article. Uh, Key findings: improvement in the long run standard of living largely depend on people's willingness to work and their ability to invest in capital. Tax policy has a significant effect on removing barriers to work and investment. All taxes contain features that discourage work and investment, thus imposing economic costs that reduce living standards. Additionally, taxes impose administrative costs for the government and compliance costs for taxpayers. We talk about this all the time on the show. Two major types of taxes include income taxes, which generally tax people when they earn money and when they see changes in net worth, such as returns from savings and investment, and consumption taxes, which generally tax people when they spend money. Got a cough for a second. I'm going to turn my mic off for just a minute.
All right. Well, I tell you that there is no question. Economists across the political spectrum are all in agreement that if you look at this simply taxation simply as the effect it has on the economy, there is a clear winner as to which is better, taxing consumption or taxing income. If you want to stimulate the economy, if you want to stimulate savings and investment, which makes a better economy, which rises all boats, is better for everybody, just about every economist out there will tell you that a consumption tax is much better than an income tax.
Yes, income taxes impose steeper economic costs, often steeper administrative and compliance costs than consumption taxes do.
Yeah, I
They
mean you gotta fill out you got to
more.
fill out tax forms, and that can get really complicated. A consumption tax, you just pay at the cash register when you buy something. You don't have to tell the government a single thing about you. It is no longer the government's business how much money you make, where you make it, how you spend it, any stuff like that with a consumption tax that you just pay at the cash register. And everybody's doing that already on the state level, just about everybody.
You
And
get
the fair tax is the same way. The government knows nothing about you. It needs to know nothing about you when you are paying it at the cash register. It is just so much better from every perspective that you can measure.
administratively, and the benefit to the retail establishment that you would make a purchase at gets a stipend for administering their part of the transaction, which includes first collecting the purchase and the fair tax from you, and then submitting that to the state, which then turns and submits to the Treasury, the U.S. Treasury. And can you imagine the efficiencies benefiting at the U.S. Treasury to deal with 50 states plus the District of Columbia, Puerto Rico, et cetera?
Yeah.
In terms of that, as opposed to the hundreds of thousands of consumers that and taxpayers that would be paying at that level.
Well, this article reiterates something that you say all the time on this program, and that is moving to a consumption tax would end the tax bias against savings and investment and provide an opportunity to greatly simplify anti-poverty programs embedded in the tax code. Again, ending the tax bias against savings, and when you tax something, you get less of it. If you tax savings and investment, you're going to get less of it. The fair tax only taxes retail purchases. So saving and investment untouched by the fair tax, much better for the economy.
And also you get to see the actual tax burden that you have on the receipt when you make that purchase. You're going to see cost of item, fair tax, total, and you'll say, well, man, that's a lot of money for that. But it's not really, you're not paying any less really or more. But you are able to see exactly what you have. Now, the competition part of the fair tax that will help drive costs down because companies that provide a service or a product are going to be able to compete because the taxes on what it takes to bring that product or service to market is going to be diminished completely. There will be no tax across business to business purchases, et cetera, you will then benefit from the competition amongst businesses and providing that same service. With the fair tax in place, you'll see, just like you go to the gas station now and you buy gas for $2.78 and 9 tenths a gallon, you'll see the state tax. You'll see what your tax is inside of that amount. The tax is inside that dollar per
Yeah,
gallon.
it's included in the price. It's not added on afterwards.
Right. There's no additional calculation made on that. Now, what the Tax Foundation did was they modeled two revenue neutral consumption tax reform options, replacing the corporate tax with a 6.4% value added tax and replacing the corporate and individual tax income tax with a business profits and progressive household compensation tax. Now, these are not necessarily in the
Yeah,
direction.
they didn't model the fair tax per se, but
No.
the consumption tax is part of this thing. And another thing that this article says that I think is pretty substantial here, says that substantial evidence shows that tax policy has a significant effect on people's decision about how much to work and how much to invest in capital. And if your tax system is punishing you for working by earning more money, if your tax system is punishing you for investing by taxing your returns, if your tax system is punishing you from savings by taxing the dividends and interest you get from that, that is discouraging all that stuff. Now, while all tax systems, even the fair tax, even consumption taxes, contain features that discourage work, saving, and investment because they take money from you that you no longer have to save or invest. But that leads to a smaller economy, lower living standards when that happens. But the name of the game here is to collect your money with with the smallest possible economic impact. And again, economists across the political spectrum will tell you that a consumption tax beats an income tax in that regard, hands down, no questions asked.
Without a doubt. We're reading from an article from 2023 at the taxfoundation.org website. And this is something that we talk about when we have people ask questions about, well, what does this do to low income earners? What does this do to like a single mom and 3 kids and she's working 2 jobs, et cetera? Rising living standards are a vital component for advancing human well-being. The article continues, the concept of well-being is multifaceted and includes several dimensions related to material abundance, such as income and wealth, housing, work, and job quality. Well-being also includes dimensions like social connections, civic engagement, safety, and environmental quality. Well-being requires people to be able to thrive across many aspects of life in pursuit of greater meaning. For each individual, that could be different and probably is to some degree. But the bottom line is the fair tax has a component that heretofore is not located in any other device or endeavor that would switch from an income tax to a consumption tax. You hear about flat taxes, that's still an income tax. You hear about other value-added tax, which of course would remain, the income tax would remain in place. And like in Europe, the value-added tax is added on top of that, which creates a volatile situation with regard to increases in the future. The prebate, which is based on the United States poverty level, which is calculated annually at the beginning of every year, you and your family of 4, married with 2 people, single individual, you are going to get untaxed up to the poverty level based on that poverty level. You are going to get untaxed based on whatever the calculation is for an individual, family, etc. Every month, this number comes to you. So you are essentially going to get that check. It's not an entitlement, which I hear people say sometimes. It's not an entitlement. It is indeed a refund of taxes that you have yet to pay through the fair tax and make your purchases. but you are going to be able to decide what your essential needs are and use that use that prebate for the purposes that you see fit to take care of yourself or your family.
Absolutely. And that's just it. You hear this all the time. People, as we did a couple of weeks ago here, when I asked the artificial intelligence thing, what's wrong with the fair tax? And one of the things they said at the top of the list was, it's regressive. It hurts the poor. And it says, no, it doesn't, because we have the prebate to make sure. And the red herring that people throw out. Poor people spend a much greater percentage of their income than rich people, but that really makes no difference with the fair tax. What makes the difference with the fair tax is how much of your spending is above the poverty level. If you spend 100% of your income, but you still don't spend above the poverty level, your tax rate is zero with a fair tax, and all that is. That's pretty cool. So how much time we got left here? So about 7 minutes.
The,
What's your next point would be, sir?
the consumption tax is a neutral tax burden between uses of income. It removes the income tax bias against saving, which is important. It actually contributes to an incentive to save because there's no tax on your savings, and you can get into the complexities of somebody with a 401k and the role at whatever point in time the fair tax becomes the law of the land, and there is a switch. You're still going to benefit, and we can get into that in another episode. Higher income households save more, treating income neutrally. So no matter its use, it's completely separate from the distribution burden of a tax, as any tax type can be structured to meet various distributional goals. There are four approaches in the Tax Foundation's report about consumption taxes: the retail sales tax, the value added tax, a flat tax, or what they call a Bradford X tax, and the consumed income tax. Each design is different. All four approaches aim to provide neutral tax treatment between saving and consumption. Now, when it comes to consumption, we just talked about the fair tax and the prebate. But you can decide how much you spend, and you pay your tax when you buy something new or a service that's related to something that you're wanting somebody to come in and repair your air conditioner. So you end up in control. It's not you pay the government first before you pay your family or make your own expenses.
Oh,
So
I tell you, if there's anything that bugs me no end about the income tax system, it's the withholding, where the government has set itself up as everyone's highest spending priority. You feed Uncle Sam before you feed your family. That is just wrong, and the fair tax fixes that. You set that up really good. Go.
Oh, and I'll take this moment to direct people over to fairtaxstore.org. Fairtaxstore.org has a couple of free items that are on there with no shipping charge either, no money out of your pocket. You can get at least up to two every time you order in 50 unit, 50 card packages. A business size card that talks about the prebate, and we create these annually after the threshold of the poverty level is determined. And the other one is a palm card that you can hand to somebody that is a little more information about the fair tax. And we talk on the program all the time that it's up to us to make those impressions. And we're here every week performing our magic in the media, where you can do the same thing with your friends and your family. If you go to fairtaxstore.org, look for the two cards that I just mentioned and get them and have them with you and use them to make those impressions. There are misconceptions out there, as we noted with the with the Tax Foundation website report, that they are going through a volume of information and ideas and concepts. And as you go through the learning more about the fair tax, you have to keep in mind that there's plenty of information out there about a consumption tax that's not always the fair tax. There's a different
I'll say
consumption general and the fair tax.
this is quite an exhaustive article. I mean, if you really get into stuff like you can spend quite a while digging into this article, consumption tax versus income tax at the taxfoundation.org. We got about 2.5 minutes left, so we're gonna have to jump down to the conclusion, which says improvements in the long run standard of living largely depend on people's willingness to work and to invest in capital. We mentioned that at the beginning of the thing, and that tax policy has a significant effect on decisions of how much you work, how hard you work, how much overtime you get, stuff like that. And they also, tax policy affects your investment decisions by changing after-tax benefits of both. And the conclusion here at the bottom of this Tax Foundation org article says, reforming the current income tax system toward a consumption tax would support rising living standards and economic growth, combined with a simpler system of providing tax credits for individuals and children. Such a reform could reduce the economic, administrative, and compliance costs imposed by the current tax system. Well, let's take that the next step. If you get rid of the current tax system, replace it with the fair tax, compliance costs almost disappear entirely. Administration, really easy. Compliance costs almost go away entirely. And so I would love to see the Tax Foundation dig in to the fair tax per se, not just talk about consumption taxes, in general. But they do conclude that a consumption tax is much better than the income tax. That is not a surprise. Just about every economist in the country agrees that that's the case.
And what we need to do as for those of you listening and watching our program every week, and we thank you for that. Bob and I appreciate your time. And we do ask you to pick up those cards off of the FAIRtax Store website and pass them out and have those conversations and get in touch with us through the shows that we run. They debut every Tuesday night at 8 p.m. Eastern Time on YouTube and on the Facebook page for FAIRtax Guys.
Yes, you can leave us comments on both. We do read them, and we will respond to them if we can as well. But that's going to wrap up this edition of FAIRtax Power Radio. Good job there finding us something to talk about this week. And so, again, we thank you for watching, listening, sharing the videos. That helps a great deal. And so until we meet again, same time, same station next week, I am Bob Paxton.
I'm Bob Scarborough.
We are the FAIRtax Guys, reminding you that the fair tax is the only truly fair tax. And once you understand it,
we'll demand it.
So tell me, how can I pay less taxes?
Less?
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay focused and get ahead.
Exactly.